Hello everyone, my name is Gregory Schnazy and let's talk about Bitcoin Borrow Die. As always, these videos are for educational and entertainment purposes only. They are not financial or tax advice. Today's topic of the Kentucky Derby, just finishing yesterday, is the fastest horse in the race. We're going to look at Bitcoin compared to other popular, high returning investments over a few different time periods and see the winners. Bitcoin Borrow Die is powered by Bitstack. Build your wealth in Bitcoin terms. Sign up at www.trybitstack.com. The first view we're going to look at is the 10-year period. And we're going to compare Bitcoin to Strategy, QQQ, the NASDAQ 100, Gold, and SPY, the S&P 500. So over a 10-year period, Bitcoin has really dominated in terms of returns, averaging compound annual growth rate, a CAGR of about 67%, which is really phenomenal compared to strategies at about 22%, QQQ about 20%, gold at 13 or 14, and SPY at about 13. And what's really interesting here is the Sharpe ratios, where even though Bitcoin is very volatile, its upside more than makes up for it and has the highest Sharpe ratio here. If you started with $10,000 in Bitcoin 10 years ago, it'd be worth about $1.7 million today. And then starting with the same dollars for these other investments, you'd have about $107,000 in strategy, 61, about 62 in QQQ, 36 in gold. So this is just showing Bitcoin performance over the 10-year period. It's really interesting when you compare these assets in multi-year periods here. So far we've been talking about the 10-year period. We can look at the 5-year, 3-year, 1 year, where Bitcoin has jumped around quite a bit. Over the last 1 year, gold has really done well, especially as central banks have started to buy it. But this is a really interesting breakdown of different time periods and where the assets line up. One thing with Bitcoin is definitely its volatility. And looking at the drawdowns from the 17 to 18 bear market, we saw about an 83% drawdown. And then from the 21 to 22, about a 77% drawdown. And we're currently going through this 25 through 26 one. Well, now we're kind of hopefully starting to form a bottom and starting to at least move sideways, if not up. But that's about a 51% drawdown. So it's really interesting here is that Bitcoin remains very volatile, but the drawdowns have been less severe over time as the market grows, as it matures, and especially with strategy, Strive, Stretch, and Zeta just continuing to sell their digital credit and bring in net new dollars and at high scale, and it's ramping up very quickly. When we look at gold and kind of Bitcoin over especially the short time period, as I mentioned before, central banks bought a bunch of gold and it has performed really well over a 1 year period. It's done well across the whole time period, but not as well as Bitcoin. And then Bitcoin is doing really well over multi-year windows that definitely matter. Again, like the 67, and depending on what time frame you use, maybe 50 or 40% CAGR, compound annual growth rate, for Bitcoin is really striking, especially as we're looking at this from the Bitcoin Borrow Die lens, where we want to borrow an asset that's rapidly appreciating over time and conservatively borrow against it. Bitcoin has performed extremely well for this. And volatility is a tool. It's not the obstacle. Volatility is a feature. It's not a bug. To be able to grow like this, it's going to be volatile. especially coming from a smaller base. You can see this with all sorts of things, but Amazon's a really good example. And all that is fine and great. So what are we going to do looking at Bitcoin at around $78,000 now? So after this drawdown from about 126,000, it's a decent entry point. We're hopefully, again, starting to form a bottom. If you're dollar cost averaging, you would just be automatically buying more as the price is lower. This is a great time to continue to accumulate the assets so that you can borrow against it in the future. Speaking of which, if we look at our conservative, like 10 to 20% LTV, this allows us to borrow safely, gives a lot of breathing room, and avoids margin calls and posting more collateral when there are drawdowns. We want a DCA as the price dips. We buy more. And you can model all this out at bitcoinborrowdie.com. Put in your own categories, see how this works for you over time. But I just wanted to look at Bitcoin over a few different time periods, especially over these longer ones around 10 years, to see the fastest horse in the race. Let me know what you think of this video. Add your comments and like it. And sign up at www.bitcoinborrowdie.com.